Hey guys, with all the uncertainty that's going around in the world right now, I just thought it would be a really good time to give you guys my top 3 stock picks in the ASX200, sorry. These will be really good stocks if any of you guys want to put them on your watch list or even in your portfolio, but please remember, I'm not a financial advisor in any way possible. I'm only halfway through my degree of finance and economics. You know, I hope you guys all enjoy this and whatnot, but this is my own personal opinions, and I really hope if you guys are going to be investing in any of your stocks, use your own discretion and don't just go off what I'm saying. So this is going to be the first of 2 parts. Today I'm going to be releasing the ASX200 part, and then I think on Friday I'm going to be releasing the S&P 500 version, which is going to be 3 stocks in the S&P 500, which I believe will do really well in the next year or so. Okay, so now that we've done our 1-minute intro and I've annoyed you or wasted all your time, we'll get into the video. Okay, so my first stock that I want to share with you is my favorite stock of all time at the moment, and it is CCP, otherwise known as Credit Corp Limited. So what Credit Corp Limited is they are a company which provides debt collection and debt purchases. So what they'll do is predominantly they'll go to banks and insurance offices and then take people's debt from there. So what this means is that they will be a company that is predominantly hit hard in bad times, but does very well in good times. So this can be seen when you look at the market report and look how they've done over the last few years in a really good bull market, and then look how they've done in the last 2 months because of what's happened with the virus around the world. So if you want to have a look at their share price before the virus, they were at around $40 per share, and then by the end of March, I think they were around $6 per share. That's an 80% haircut on a company that is almost guaranteed to grow after the virus is over. So if I was any of you, I would be very interested in this company. I'll definitely have it on my watch list, but let's go into some of the stats for it. I'm just going to read them off my computer because it's easier than remembering them. So they have an EPS of $1.412, a PE ratio of 13.79, which is quite good. Anyone understands that. A dividend yield of 3.3%, which is decent. You can't complain on 3.3%. And then an equity debt ratio lasting around 30%. So all those, when you come into consideration and you look at them and say, hey, I'm getting an 80% hair price on what my stock is, and then I'm also getting these quite good P ratios and whatnot going along with it, I would strongly recommend to have this in your watch list. I myself have even bought this stock, and then I think I've had it for around 2 weeks and it has increased by around 11.25%. Okay, so my second stock I would like to pitch to is Oil Search Limited with OSH. They are a company that goes into Papua New Guinea based in Australia, and what they do is they search for precious metals and oil. For those who don't know, Papua New Guinea is an hour or so north from Cairns, and it is directly east of Indonesia. Otherwise, a lot of people in Australia will know the main place in Indonesia that we all go, Bali. So OSH have been hit decently hard from coronavirus. They were, before the virus, they were around $7.50. After the virus, they were at around $1.90, which is around a 75% haircut on the deal. They have a market cap of 7.2 billion, P ratio of 19.35, which admittedly is a bit high, but I don't really mind it considering the amount of cash that they have, which is 1.3 billion. And then they have an EPS of 276 cents and dividend yield of 2.4%. So overall, these ratios are all quite good. Now, if I'm able to do it, I don't know whether I'm good enough at editing so far. I will put them up in left or right of the screen, whichever one is bigger. And you can just have a look at them yourselves and say, hey, are these good and whatnot? But I myself find that this is a decently low risk investment, and I feel like anyone would be happy to actually do this. Also, if you have a look at the intrinsic value that a lot of people believe that it's going to go to, it's predicted to go to around $5.5 at the moment, what it's meant to be worth. However, it's actually worth on the market $3.5, sorry. if you believe the math, and if you want to do the math yourself, you can. You know, there are a lot of places out there that will show you how to do it. I've learned it in university myself. I know there's a lot of people that know how to do it online, and there are a few courses online that know how to do it. But yeah, that's actually giving you a 6 to 7% increase in the price of your stock. Okay, so my third and final pick is Vicinity Centres, VCX. So what they are is a real estate company which predominantly holds shopping centres. They currently have around 1,100 shopping centres around Australia. So as I think anyone would know, a lot of retail has been hit hard due to the virus. So this would mean that their stock price has also been hit hard. But due to the fact that in the last week or two, everything started opening up and around the world, and predominantly Australia, restrictions are starting to be eased, their share price has increased. I think over the last 3 weeks has increased by 25%. So I'm going to go through their stats again. They have a market cap of 6.3 billion, which is very good. P/E ratio of 11.28, which is quite low. EPS of 155 cents. Dividend yield of 8.3%, which is amazing. I think 8.3% for dividend yield is perfect. And then cash at bank is, well, that's in a way, 42 million. So 42 million isn't a great cash at bank. However, you also have to consider that they are a real estate business. So what they'll do is a lot of their cash and a lot of their assets is in real estate. So for example, they own a lot of shopping centers, so that's where all their cash is going to be. I looked at the numbers and they almost had $2 billion worth of tangible assets in real estate. Once again, if we do some calculations or look at the predictions of their intrinsic value, what it should be around is $2.3. That is a 33.33% increase on what they are at the moment.
Yeah, boy. Oh, hello. Oh, hello. Oh, you and your big dreadlocks.
That's Gumball.
Yeah, buddy. Get more.
So yeah, guys, I think that will be everything for today. I hope you guys have really enjoyed. Just remember though, these are my own opinions. They might be right, they might be wrong. Please choose your own discretion though whenever you are investing. And if you are investing and you would like to talk to someone, please make sure that you talk to a financial advisor or anyone that you know. So thanks guys, have a good day. I hope to see you next time.